Hello guys, welcome back to new video. In this video we will be going to see fundamental analysis of latent view analytics and why the stock is in a correcting phase. So let's start with the video. First we will see what does the company do and where it stands in IT industry. Latent view analytics provides analytics services such as data analytics consultancy, business analytics and insights, advanced predictive analytics, data engineering and digital solutions. Latent View Analytics is the first purely analytic listed company on NSE and BSE, which is one of milestone for the company. The company provides services to blue chip company in technology, finance, HR, supply chain and other industry domains. Supply chain can be a next big trigger for IT industry, especially for Latent View Analytics, which is purely in the analytics section. Latent View is the global MNC company where 90% work comes from outside India or outside Asia. Its global delivery centers are in Chennai and Bengaluru, which serves as the hubs for operation, while on-site go-to-market teams and subsidiaries in the USA, Netherlands, Germany, the UK, and Singapore ensure dedicated support to the client in key markets. Latent has 60+ clients, including 30 of the Fortune 500 companies. Latent recently come with its IPO of 305 crore equity share at an issue price of 197, comprising fresh issue and offer for sale. It has received an amount of 447 crore from the proceeds of the fresh issue. It was the most subscribed IPO of all the time in India, with total subscription of 326 times, where NII categories got nearly huge subscription of 850 times. Latent View is globally recognized and awarded by Deloitte, Gartner, NASSCOM, Microsoft like big MNCs, etc. Company says it has achieved 22% better accuracy in demand forecasting for NPI sales for leading toy manufacturer, created an artist selection tool for easy decision making on campaigns worth approximately for $70 million. And through company's analytics tool, there was a 25% increase in innovative success rates of one of the largest personal care brands. Now coming to the product range, that is what are the offerings of the company. Company offers solutions in industry like technology, industrial, consumer retail and financial services. Where in technology, it provides solutions like customer analytics to see insights from the data generated through applications and software. Marketing analytics is the another thing it does in technology, which boosts the ROI from marketing campaigns and improve planning of marketing budget. In industrial services, company provides forecasting demand and supply chain solution. And I think this can be a next very big huge trigger for company. Anyways, that we will see in growth outlook. Predictive maintenance of machines and support is also done in the industrial sector. In consumer and retail offering includes product assortment, channel strategy and marketing speed. Also it includes social media listing, which is very boom sector currently. Product innovation and development is also included in the consumer and retail sector. In financial services, company offers fraud and risk analytics and companies expanding new solutions in this sector and customer analytics to provide new products. Now the revenue breakup of the company and how much revenue comes from which country and contribution of each business segment. Here we can see the global presence of company where company operates in USA, Europe and Asia Pacific or India. And the total revenue of company stands at 594 crores. So USA generates 95% of the total revenue, India contributes for 2.7% of revenue and others as a contribution of 2.3%. So now we will see which business segment contribute for how much revenue. So technology contributes for 69.2% revenue, which comes at 370 crore, which is the most. Industrial contribute for 13.6%, which comes as 67 crores of the total revenue. Consumer segment has a contribution of 9.7%. which is nearly about 54%, and financial segment contributes for 7.4%, which is come at 45 crore. So here, from the above data, we can see company has most of its dependence on the US business, and the segment wise most revenue comes from technology business. Revenue from the top 5 customers contributes 60% of the company's total revenue, whereas company said that it will diversify its customer base in the future. Now coming to promoters of the company, one of the most important aspects of fundamental analysis. So first is Mr. Rajan Sethuraman, who is the CEO of the company, containing a vast experience in oil and gas and technology sector. Here sir has completed his education from Birla Institute of Technology and Science in Pilani and Institute of Management from Calcutta, which is IIM Calcutta. And also sir has worked with global organizations like Accenture and KPMG. Mr. Sethuramanan currently has strategic and leadership responsibility in the company. Now next is Mr. Rajan Venkatesan, who is the CFO of the company, containing a vast experience in BFSI and consultancy sector. Having sir hold bachelor's degree in commerce from the Hindu College and is a member in Institute of Chartered Accountants of India, and also sir handles North America and the Indian markets. Mr. Venkatesan currently has a responsibility of M&A, investor relations, treasury management and financial reporting, and also taxation of the company. Now coming to the growth outlook of and the future plans of the company. Management is confident about the BFSI and CPG and retail vertical, which is expected to grow at a CAGR of almost 20% over the next 5 years, and it will exceed $110 billion by 2024. This $110 billion is the overall industry size of this segment. The global big data analytics market size was valued at $272 billion in 2022. Now it is projected to grow from $308 billion in 2023 to $745 billion by 2030, which is nearly double of the total industry, where company is in very sweet spot to take this opportunity. Latent Analytics aims to increase its presence in Europe, and it is expanding variously and is actively evaluating M&A opportunities. Also, it has invested in some of the front-end opportunities in Europe. Confident of beating industry growth rate by 5 to 10%, where management expects a total growth rate of 20 to 25% CAGR of the total company's revenue on the company size in the next 3-year time frame. The European business is going through a reset phase, which is said by the management, but the company is having conversation with the high quality accounts and expect to grow in the future. Now the next big trigger for the company, which I believe can be, is the supply chain segment, where sometimes back only a corridor was announced for between India and Europe in G20 summit. In this region, company is expanding its presence, and if the supply chain business grows, there will be a requirement of tracking it and analyzing the supplies or the exports and imports, which is done by the latent view analytics, and latent view analytics comes in picture in this form. 4 out of 5 technology companies are company's customer, which helps them to in the future growth. The company has nearly total of 1000 crores of cash and is open to make one of the largest in acquisition or 2 medium-sized acquisition in the future. Now coming to the financials of Latent View Analytics Limited. So we will start with the market cap. So Latent View Analytics has a market cap of 8,415 crores, where it has a current price of 411 rupees, which is corrected from the high levels. The 52 weeks high of the stock is nearly a 466, which is just shown by the company, and the low is of 310. So 300 is a nice support or very strong level to buy this stock. Stock P is of 53.7, which is at a higher valuations. Book value of the company is nearly of 58.9. Dividend yield is zero, where company has didn't given any dividend till yet, as the company is listed now only. ROC is good for the company at 16.7%, whereas ROE is also good for 13.8%. Face value of the company is of 1 rupees. That is, earlier the share has given its split before it was listed. Industry P is of 35.6. So stock is currently trading at a higher valuation than the industry P. This is because Latent View Analytics management is confident of beating the industry growth. Debt to equity of the company is very low or negligible at 0.002. Reserves of the company stands good at 1187 crores. Promoter holding is also good at 65.7%. Sales growth by shown by the company is at 28.8% and the profit growth shown by companies by 31.7%. Reserves to equity, that means how much the reserves per share it per equity it considers is of 57.9%, which is a considerably a good ratio. Enterprise value of the company is nearly of 7,895 crores. EV by EBITDA is of 40.9 and EV by EBITDA is of 57.1, which is currently at a little bit of higher valuations. Now coming to the peer comparison of the stock, Latent View as compared to the top management or the top mid cap IT sector, Latent View has a very good current ratio. Current ratio is at 20.24, which shows that it can take a considerably higher levels of debt. As we have seen, company has a good cash flow, which reflects it in current ratio of 20.24. Debt is of negligible, which is of 0.02. ROC and ROE is of 16.13, which is similar to the industry growth only. The stock P is around 53.67. As we compare to the higher valuation stock, Tata Alexis trades at 60, Persistence at 45, KPIT at 73. So it is nearly a valued company or little bit of higher valuation is there. Free cash flow for the company is of 94 crore, nearly of 100 crores, and free cash flow for fire stands of 385 crore. Company has haven't placed any shares, so it is 0%, and current market price to big book value of the company is 6.97. Now the quarterly result, we will directly see the yearly on year basis comparison, as there is little bit of fluctuations in quarters result only. So for the year on year comparison on the standalone basis, so we will see from the past 10 years of data. So company has shown a huge growth around 10 to 20x from the March of 33 crores to nearly 539 crores, and the trailing 12 months stands at 566 crores. Company's expenses has also grew at a higher pace and its margins has dropped. As at on the lower base, the margins remains low for higher for the company, and at a higher base it becomes considerably lower. But the management has said that it can sustain the margin of 27 to 25 or 25 to 30 levels or 30% levels. Other income for companies also increasing for 64 crores, and interest is very low. As we have seen, the the stock debt is negligible. Depreciation is of 9 crore, and the profit after tax comes up trailing 12 months of 190 crore. So as we can see from this, the profit and loss statement here, it shows a consistent growth year on year. Like in 2021 it was 306 crore, then rose to 410, then 539, then in the trailing 12 month it comes at 566, because there is a slowdown in IT industry. We will see this in the next slide, where we have discussed about why there is a large fall in this stock. So also there is a good jump in the net profit on year or year basis. Each year the stock, as compared to the previous year, it the profit has grown. Like in year 2021 it was 91 crore, in year 2022 it is 130 crore, in 2023 it's 155, and it has gone to 157. So we can see that the stock has shown a very nice jump in the net profit also. Sales growth for the company stands at 32%. Compounded profit growth for 10 years stands at 35%, and the stock CAGR of stock returns for past 1 year is of 17%. Now, if there is any corporate actions shown by the stock, so in 2010 the bonus issue and stock split was declared by the company. So that's why we have seen that the face value is of 10. The bonus split, there was a split of from rupees 10 to rupees 1 equity shares. And in 2021 public issue has come of the stock. Before the public issue only, there was bonus issues declared by the company. Now coming to the cash flows, cash flow stands from operating activity at a good level at 97 crores, and investing activities of minus 277 crores, and in finance activities of minus 4 crores. So the net cash flow is negative, that is minus 183 crores, as this directly conducts that of investing activity, which shows negative in investing activity. This is not a concern, because as the company invests, it is a good sign for the company, as company invests more and more and more. But the cash flow from the operating activity is also good at 100 crores, so this is a good sign for the company. So coming to the ratios of the company, debtor days are decreasing for the company from past 2 years from 75 levels to 67 levels, which is also a good sign. Cash convenience has also dropped from 75 levels to 67 levels, and from the previous year of 73 crores 73 days to 67 days. Working capital days were rising for the company from 2019 to 2022, but in the March 2023 it has dropped. In the financial year of March 2023, it has come to the levels of 80 days, and the ROC of the company is at constant from 17% from previous year. Similarly, in FY 2023 of 17%. Now coming to the shareholding pattern, promoters of the company holds nearly a good stake, and they are offloaded some of their stake after delisting after listing of the shares from 68.10% to 65.74%. But as shown by the management, there is no further sign of dropping the stake furthermore. FIS holds good amount at 1.83%. DIs also hold a good amount of 1.65%, and public issues hold around 30.78%. So here we can see a pattern that FIS is continuously increasing the market or investment in the company from June 2022 quarter from 0.93 turn to 1.1%, then 1.32%, then 1.66%, and then rose to 1.83%. Even there is a pain in this industry, and the company has shown a little less growth as compared. So still also the FIS has invested a huge amount or a considerably a good amount in this company. Also, DI has not sell that much amount as compared to other IT stock. They have dropped from 1.83% to 1.65% only. So this was the financial analysis of the company.
Let's see why the stock is in correcting phase after list. So as we have seen earlier, company's 95% revenue comes from USA, where company has a huge dependence. But what's its correlation with the fall in stock? So let's see. The image shows the slowdown in the American economy, where it is continuously falling, and technology plays huge role and a good contribution in USA economy. So when there is slowdown, then there will be a slowdown in IT industry as well. And the company's almost all revenue comes from USA. That's one of the reasons for the fall in stock and slowdown in the company's growth. Another reason for stock downfall was the valuation, as the stock traded at a peak price of nearly 700, and the PE at that cost comes at 100x, which is a huge PE. So this high PE was not justifiable for a 20 to 25% growth of the company. FI and DIs are one of the reasons also for such a high growth in the stock, as at the time of IPO, QIB portion was booked at 140x times and NII was nearly 900x. So obviously there was a huge buying after listing of the stock, and then there was a selling by FIs in Indian market due to bonding, which led to the fall in the stock. There were some of the reasons of the fall of the stock which were listed above. Now to conclude all the fundamental analysis and the financials, we will see some positives and negatives of the company. So for positives, industry the company works in has a huge growth potential. AI can be the next trigger for the company. As to train the AI data, we need a lot of data, and LatentView is the only purely data analytics company in the market, which is listed one. Promoters of the company has a huge experience and they are confident about the future growth of the company. It was most subscribed IPO of all the time in Indian market, which we show that there will be always more interest of big FIS and DIs in the stock in future if the stock performs well as the management expects. Now we will see some of the negatives for the company. So valuations of the company are still at an elevated level, but it is now comfortable near a 50 PE ratio. There is still more pain left in IT industry, as just a few days back Accenture has missed their target. So there will be underperformance in this history for minimum for FY24. So to conclude, stock is currently fairly placed and at a sweet spot to be in someone's portfolio. This is not a stock advice. This is just understanding a fundamental analysis of a company. So thank you for watching the video till now. If you like the video, please like, share and subscribe my channel and help me to grow to reach till more investors. Thank you.